So today we're talking about first-time homebuyer tax credit. Hold on to your horses. And I know that you're like, oh yeah, it's there. And before I go through these the knowledge with you, I want you to know that this tax credit is at the verge of being approved. So it is not becoming the law yet, but it is so important to know because once it's become the law, it actually retroactively back to the prior period. So we'll cover that. So that's why when you are doing purchase right now, you should understand what that is, so know to apply for it. All right, so that is our topic for today. And I do want to brag about Community CPA. We have received BBB's Torch Awards for Ethics. Okay, you can get an award for all kinds of things, but I think getting an award for ethics, that marks our characters. That is about Community CPA. And we are here to help. And we really are a group of people, and we have that guidance, from above to know that we're doing good things. So that's our ethic value. And we want to help our people and who are working hard, creating the future, and you are part of our team. So getting the Torch Award for ethics, that speaks loud about Community CPA's character. Now, let's say all the webinar content we give you, of course, is a research result. So I want to make sure that you know that you need to take our knowledge with a grain of salt, and do not take internet information as if that is authoritative statement. You don't do that. You only go to irs.gov or state website to gain that kind of authoritative statement, but you cannot do that with any other site, including our webinar content. All right, so before we go into the new first-time home buyer program, I want to point out that we had first-time home buyer program back in 2008 to 2010. That program is already closed, right? But we want to just refresh your memory. We had it before, so don't confuse yourself with the other one. That one belongs to President Obama. But right now, we're talking about a new first-time home buyer credit for 2021. This one belongs to Biden, okay? And President Biden had made a promise. When he was running for president, he made a promise to America to make home ownership more accessible to the millions of renters who seek for themselves and their family a good place to live. And this is what the Biden's promise is to the American and when he was running for election. So this first-time home buyer credit is exactly the reflection of his promise. So now, on April last year, the Congress already have this on the table to get approved, but the bill is still there. It's not becoming the law yet. And when the bill proposed that, so the bill proposed to grant first-time home buyer up to $15,000 in refundable federal tax credit. What does that mean? Every time when we talk about tax credit, remember I have this slides, I talk about tax credit versus tax deduction. They're not the same, right? They're not the same eggs. They're not the same. And the tax credit is directly reversing your taxes. So let's say you make $100,000, but you only pay $20,000 taxes. Tax credit is to reverse your $20,000 tax, but tax deduction is different. And the tax deduction $20,000 means that you made $100,000, then you reduce the $100,000 by the deduction, then you are only reducing the income. So reducing income is not the same game as reducing taxes. So tax credit is basically means that whatever I give you that number, It is your tax dollars. I'm reversing it for you. But when they say refundable tax credit, this is even better. This means that even if you don't pay taxes, you will get the money. You get that refund. That is what refundable tax credit means. So child tax credit is a refundable tax credit. Earned income tax credit is a refundable tax credit. Child care tax credit is a refundable tax credit, right? So those are refundable just means that even if you don't pay taxes, you got a bunch of refund. That's why there are people who are really didn't work much in the year, but they came out of the free tax preparation place. They got like $10,000 refund in their pocket. What was that? What is that 10,000? Did they pay 10,000 taxes? So they got the 10,000? No, they didn't because they got refundable tax credit. So 15,000 is a refundable tax credit. Now, how are they going to do this? So once the law come in place, and IRS will produce a form. Then you will put in the form information, making yourself eligible for that. Then your tax refund will be added for $15,000. Okay. Now, this here, you might hear people talk about first-time homebuyer tax credit and the First-Time Homebuyer Act. So it is really interchangeable. It means the same thing. They're talking about the same dollars. This is the $15,000 we're talking about. And this is to help the low and the medium income American, okay? The bill introduces wealth building opportunity for historically marginalized community and to fulfill one of President's promise. All right, so how it would work. And it is not a loan. So right away, it is not a loan. It is a cash grant. You hear that? It is cash grant, non-taxable because it's a refund of tax credit. The tax credit is equals to 10% of the home you purchase price. So we're talking about 15,000, right? So that means your home purchase price should be above what? 150,000. So when you buy home, if you can buy home for $10,000, then you're not going to get much of a first-time home buyer credit. You need to have that home at least 150,000 in order you to qualify for that full amount, right? So that's a 10% of your home's purchase price, and it may not exceed the maximum of the 15,000 in 2021 inflation adjusted dollars. So this is what it says is that if our inflation goes up, the IRS will adjust that 15,000 to be different amount, a little bit different, just like standard deduction we see is $400 increase on the married jointly filing, right? So they do a little bit of inflation adjustment. When you receive the tax credit, it applied to your federal tax bill or refund directly to you. Okay, and a married household who file their taxes separately may claim half of the credit. So basically, let's say you're married, but you two are just really not filing tax together. You're married filing separately, then you would have a $7,500 goes to one person, the other $7,500 goes to the other. Okay, non-married buyers may claim their proportional share of the credit. What does that mean? Let's say if you have a partner and you're not married and you two buying the house together, and then you can claim the proportional and your half and your half. So pretty flexible, and just basically as long as it's your first time and you have it. Now, let's look at who qualifies. So the reason, even though it is not becoming the law yet, folks, because it is, once it's become a law, it will retroactive to the 1st of 2021. Okay, actually the law itself, the proposal says that it will retroactive to December 2020. So wherever they retroact, and that means you're probably going to buy something this spring, and then you want to know how to qualify yourself. So look at this. You must be a first-time home buyer and must not have owned a home in the last 36 months, which is 3 years. So you did not own a home in the last 3 years. Must be the first time using the credit. Eligible home buyer may use tax credit only once. So of course, you buy first-time home buyer, you bought it, you got your credit, and then next year you go, oh yeah, I found that perfect house is 150,000. I can get my 15,000 now. I don't want that one because I only claimed half of it. House is too small. And no, you cannot. You can only just use it once. If you didn't claim the full amount, then you used it once. You're already done. Must not exceed the income limitation of this area. And this is a little tricky, is in the proposal. So I want to explain to you what that means. So for example, in Des Moines, the median, it is called a median household income in Des Moines is 48,000. So you actually can go on to Google. You can Google your area. What is your median? For example, I Googled area median for Des Moines is 48,000. So what this proposal says, you cannot go over 60% of that median. So if you made more than $76,000 a year, then you are actually not eligible for this credit. You have to make less. So that's where I want to demonstrate that to you. So you kind of know which area you are in, and you can calculate, get the median, and you use that median times 1.6. Then you will know how much income you can have maximum. Must be purchasing a primary residence, not a secondary, okay? Not rental property. Must be at least 18 years old or married to a person who is 18 years old. This rule prevent mom and dad from buying a home with cash in the name of a child. So they have to be older than 18. You can't buy first-time home buyer for your 5 years old. That's what it says. It's preventing mom and dad to buy a home for 5 years old and claiming tax credit on that child kiddie tax return. So that doesn't happen. And they want to make sure that you're all adult and that's your first time buying your home. Must be purchasing the home from non-relative. That means you must buy the home arm's length. And you cannot be like, oh, if I buy this from my mom and it is only $50,000 home, let's make it $150,000. So that way I don't really have to pay my mom, but I can get $50,000 credit. No, that is written in the proposal to prevent you from doing that. So that just means IRS can do compliance audit on that, okay? How to receive tax credit. The bill did not yet say how you do it, but if you look at the history, basically IRS would produce a form. IRS will give you the form and you claim it on it. So let's say if the bill came out, get written into law too late, let's say by November it came in, and then 2021, people already filed their tax return and they didn't get the 15,000. So what could happen is IRS could produce a form. So you fill up the form separately. Then they will process your $15,000 refund. So that could happen. And those are things that IRS has done that in the past, but we will wait and see what IRS will do. And so sometimes we tell our client that if you knew you're going to buy the first time home this time in 2021, I would say that you file extension. Give the government a little bit time to come up with the rules. And so by the summer, and I really think that it will be coming the law, and then you can file your tax return in October, and later after extension, file them in October, then you don't have to file extension or do something weird, right? So that would be a recommendation. And no application form, there is no application form otherwise in order to qualify. So right now there's not developed, but we already showed you earlier how to qualify for that, right? So these will be translated into the form and you will get something from IRS to fill it up. And here, the First-Time Homebuyer Act 2021 is retroactive to December 31st, 2020. You see that? Which means that home buyer can file amendment return for the prior year's filing and receive cash payout from U.S. Treasury. So, for 2021, we're doing 2021 taxes right now. You can file extension, wait until October to file, then you don't have to file amendment. But even if let's say you want to file your 2021 on time, no problem. I really think that when the home buyer credit comes in, and they will have another means for you to apply without amending your taxes. Otherwise, if that's what government says, amend, then you amend, right? I never really like the word of amending taxes because there's a high risk for audit. But if that's what government wants people to do, I guess that's the only way for you to do, then you just do it. All right. Stipulations on the credit. If you change primary residence or sell within 4 years, you will have to pay some money back. So that says that you got your first-time home buyer credit, $15,000, but you sell within 4 years, you get it, and you'll have to pay something back. Or you say that that's no longer my primary residence, and my business is so successful, I'm moving into a bigger home, then you have to pay that back, some back. Okay, so that's what that means. Stipulations on credit just means that things, will change your credit. So that is one of the things. The intention is to support low and medium income household and are meant to build a long-term wealth through real estate. And it's not geared towards to home flippers and the real estate investors. Those people who do sell or change primary residence in that time will realize the tax liability based on how long they lived in the home. But of course, there's exceptions because home buyers who sell their home within 4 years to a non-relative, and those real estate gains are less than their tax liability, must only pay their real estate gains. Only other exceptions for death, divorce, and certain military transfers. So there are always going to be exceptions. Exception just means that even if you sold within the 4 years, you don't pay it back because of certain things. For example, with prior Obama first-time home buyer, and if you change jobs, and they allow you to do that, you don't have obligations to pay it back. So there's stipulations in there, and we just have to wait for the details to come in. We have some frequently asked questions from our client, so we put it in here. So can you buy if your fiance or non-relative buying the home with you are not first-time home buyers? So you are first-time home buyer, but your fiance is not. Can you do that? Yes, you can, but the credit will be proportionally reduced. Okay, so you will have the half of the credit because you're buying it together, right? Because this person pay half, you pay half. Of course, if this person pay 10%, you pay 90% proportionally. That's what they mean by proportionally. Can the credit be used for manufactured homes? Those are Lego homes. I call them Lego homes. Modular homes, they're just like big Legos, and you put them here on the ground and then you stack them up, they become home. So the answer is yes, they're home. So just make sure that if you happen to buy trailer homes, mobile homes, know that you qualify. It just, of course you qualify, but it is 10% of the home value. If your trailer home worth 15,000, and then you have your 15,000, that's only what? That's only, why am I giving myself such a hard things to calculate? So it's only 10% of the total purchase price anyway. So 15,000, you only get a $1,500 for the tax credit. So that is a yes answer. Can I use the First-Time Homebuyer Act to build a multi-unit home and then rent out the other unit? My tax payers, people who come to our firm, they're really innovative. I mean, that is probably one of the most asked questions. So here's the answer. Yes, you can use your first-time home buyer credit to purchase a 2-unit, 3-unit, 4-unit home, as long as one of the unit is your primary residence. Look at that. So really, there is a lot more to be covered when the law is really signed into place. But I want to give you this link, folks. This is the congress.gov bill, and you can go in to study that bill Or you can just sit around having a beer, watching TV. And if you hear our little bell rings, say we have a new webinar coming in, and we might be talking about the finalized bill for first-time home buyer. I am so anticipating that to come through in 2021. I think it will really boost the young people to settle in. You know what? I'm not thinking about using this to revitalize the economy. I felt like real estate is already so hot. Now we add this drop of water and it's going to be even hotter. But what it will do is it will settle the young people. The new first home buyer, when they bought a home in Bloomington, Minnesota, I don't think they're going to be thinking of moving in a year, right? So the side effect is actually a big benefit I am looking at for stabilizing the economy. So people are not moving like baby changing diapers, and that would be the way to do it, because we no longer, I mean, the young people no longer have home. I mean, they move all over the place. They change employer from, you know, one place to another. It's like they're gypsies, they're job gypsies, right? They're going everywhere. So, but if you have a home, that would be different. Don't forget, you can even claim home expenses when you work at home, right? So that would be something to look into. And one more things we want to cover, other act that may benefit new home buyers. This is outside of that first-time home buyer credit. There is another one. There's called Equity Act. What happened is the proposal says that it will pay $25,000 cash to eligible home buyer, to somebody, to a new home buyer, to offset the closing costs, taxes, and the interest. Cash out. But of course, this one says that this 25,000 cash is given to people who has, if I remember right, who has two generations, their mom and dad, their grandparents, none of them have ever owned a home. So they are the first people in their bloodline owns a home. So those people, they will be giving 25,000. Can you imagine what a big deal that would be? So this is also inside of that same bill. It's called Equity Act. It's giving additional 25,000. So 25,000 plus 15,000, we're talking about $40,000 incentives for people who are renting home now and to buy their own first home. Amazing. So much money on the table. And I'm just thinking that as a country, we must have a very good printing machine for the cash, because this is just unbelievable. $40,000 for people can become a first-time home buyer, first-time homeowner. And for those people, their parents, their grandparents never owned a home. Now they become the first generation of people in the United States of America with their own home. That's quite legendary, quite amazing. So this is what's in that act. So with that, I conclude today's topic, first-time home buyer. And see, folks, you can email Catherine at Community CPA, and she is amazing. She knows everything I'm talking about. She does a lot of research for me, and I call her librarian. I call her everything. She does a lot of things. Email her for the topic you want to hear, and you can always call us. Know that we're open 6 days a week. We are a CPA firm, a very weird one. We open 6 days a week all year round. And I don't think you find another one in the country doing that, but we have been doing that for the past 27 years. So we keep our tradition, just because we know we have some workaholics. They work 5 days and the only time they have time is on Saturday. So we open Saturday for workaholics, for entrepreneurs who are crazy about working. And obviously, we don't see any other characters on Saturday because they're just all too busy with other things, but only crazy people working on Saturdays. And we have a bunch of them here. All right, I will talk to you again on Saturday. And I am actually still thinking about my Saturday topics. So I will let you know on the email sending to you, and I will see you on Saturday, folks. Okay, give me a thumb up. and subscribe to our channel. I'm counting on you to give me the number that I'm excited about. So every time I come to the webinar, I'm excited because so many people are coming to see me here. I have one question here. Will this only benefit first-time home buyer starting from passing of the law? Yes, they're only benefiting from the people who did not own home for the last 36 months, 3 years. So if you had a home before 3 years, then you lost it, and then you are a first-time home buyer too. So I hope that answered your question. I will talk to you again. Bye-bye.